Strategy Management Series. Video number 73, Strategy Formulation. Step 6, Strategy Selection, the Space Matrix. Welcome back to the Ready MBA series on strategy management. In our previous videos, we have been discussing strategy selection, the sixth step in the strategy formulation process. This step consists of identifying and selecting courses of action that a company may choose to achieve its strategic intent, mission, vision, and objectives. To help define those, the planning team can leverage generic strategies and strategic frameworks. Generic strategies are fundamental approaches that businesses adopt to gain a competitive advantage and position themselves effectively within their industry or market. Strategic frameworks are analytical tools that help the planning team visualize the specific conditions in which the company finds itself, and based on their results, enable the company to identify potential strategies to be executed. In our previous episodes, we covered different groups of generic strategies such as Porter's generic strategies, diversification strategies, integration, cooperative and acquisition strategies, as well as restructuring and disruption strategies. These generic strategies help businesses make strategic decisions about how they will compete in the market, allocate resources, and differentiate themselves from competitors. In this video, we will continue reviewing different strategic frameworks to identify the most appropriate generic strategies to be considered by the planning team given internal and external market conditions. We'll explore another powerful framework for strategic analysis and decision-making, the Strategic Position and Action Evaluation Matrix, in short, the Space Matrix. The Space Matrix evaluates a company's or business division's strategic position along four critical dimensions: competitive position, CP, and industry position, IP, on the horizontal axis, and financial position, FP, and stability position, SP, on the vertical axis. These dimensions provide a comprehensive view of both internal and external factors. Let's break down the horizontal axis, which measures competitive position, CP, and industry position, IP. CP is determined by factors like market share, product quality, product life cycle, customer loyalty, capacity utilization, technological know-how, and control over suppliers and distributors. IP considers growth potential, profit potential, financial stability, extent leverage, resource utilization, ease of entry into market, capacity utilization, and productivity in the industry. Now, moving to the vertical axis, we have financial position, FP, and stability position, SP. FP includes metrics like return on investment, leverage, liquidity, working capital, cash flow, inventory turnover, earnings per share, price-earnings ratio. SP is defined by technological changes, rate of inflation, demand variability, price range of competing products, barriers to entry into market, competitive pressure, ease of exit from market, price elasticity of demand, and risk involved in business. Now, let's get practical. Here are the steps to develop a space matrix. 1. Select relevant variables for CP, IP, FP, and SP according to the reality of your company. The space matrix should be both tailored to the particular organization being analyzed and based on factual information as much as possible. 2. Assign a numerical value ranging from +1, worst, to +7, best, to each of the variables that make up the FP and IP dimensions. 3. Then, assign a numerical value ranging from -1, best, to -7, worst, to each of the variables that make up the SP and CP dimensions. The FP and CP dimensions are about the company's internal performance and internal strategic position. So when doing their scores assignment, make comparisons of your company to competitors in order to define a value between worst to best. The IP and SP dimensions are about the industry and the external strategic position, so score assignment between worst to best should take into consideration the company's or division's industry compared to other industries. 3. Calculate average scores for each dimension by summing the values given to the variables to each dimension and then by dividing by the number of variables included in the respective dimension. 4. Next, plot the average scores for CP and IP on the horizontal axis. CP is plotted on the left as it is a negative number by design. IP, on the other hand, is plotted on the right side of the horizontal axis, positive number. 5. Calculate the x-coordinate to be used for the space matrix vector by adding CP and IP scores. The further right on the horizontal axis, the stronger the combined competitive and industry position. 6. Now, plot the average scores for FP and SP on the vertical axis. SP is a negative number by design, so it is plotted below the origin. FP on its turn is plotted above the origin as it is a positive number by design. 7. Calculate the y-coordinate of the space matrix vector by adding SP and FP scores. The higher on the vertical axis, the stronger the combined financial and stability position. 8. Draw a vector from the origin through the intersection of x and y coordinates. This vector reveals the type of strategies recommended for the organization. Now, the fun part, interpretation. There are 4 quadrants in the space matrix, each suggesting different strategies: aggressive, conservative, defensive and competitive. 1. Aggressive, upper right. Companies in the aggressive quadrant have both strong internal and external positions. They should use strengths to take advantage of opportunities, to overcome internal weaknesses and to avoid external threats. Therefore, market penetration, market development, product development, integration or diversification strategies can be feasible, depending on the specific circumstances that face the firm. An example of a company in the aggressive quadrant of the space matrix is Tesla, Inc. Tesla has exhibited an aggressive stance by leveraging its internal strengths, particularly in electric vehicle technology and innovation, to seize opportunities in the rapidly growing automotive and clean energy markets. Through market penetration, product development, and diversification into energy solutions, Tesla has aggressively pursued strategies to capitalize on its competitive advantages and expand its market presence. 2. Conservative, upper left. Organizations in this quadrant have strong financial position but might be under competitive pressure, in challenging industries and may face some external threats. Therefore, they should adopt a conservative approach and focus on stability, efficiency, staying close to the organization's basic competencies, and not taking excessive risks. They should emphasize cost control, operational excellence, and maintaining their market position. While the industry may not be highly attractive, the organizations can leverage their financial strength to withstand market challenges. Organizations in this quadrant can also execute selective market penetration, market development, product development and related diversification. An example of a company in the conservative quadrant of the space matrix is Procter & Gamble, P&G. P&G, a consumer goods giant, often emphasizes stability, efficiency, and staying close to its core competencies. The company focuses on maintaining market leadership in established product categories, prioritizing cost control, and emphasizing operational excellence to ensure steady and reliable performance. 3. Defensive, lower left. In this quadrant, organizations face challenging industry conditions and environmental uncertainties, and their competitive and financial positions may not be very strong. Their strategies should focus on defending their market position, innovation, and differentiation to overcome industry difficulties and external instabilities. Cost control and reduction, efficiency, and focus are also required. Some generic strategies to be implemented in a defensive context would be retrenchment, divestiture, liquidation and related diversification. BlackBerry, positioned in the defensive quadrant of the space matrix, faced challenges in its competitive and industry positions as the smartphone industry evolved. The company adopted defensive strategies, including product innovation, cost control, and partnerships, to stabilize its market presence and address external challenges. 4. Competitive, lower right. Organizations in this quadrant operate in attractive industries but are under competitive pressure, may lack a strong financial position, and may be subject to other external challenges. They should consider strategic partnerships, vertical and horizontal integrations, mergers, or acquisitions to strengthen their competitive position. Additionally, they should invest in developing their competitive capabilities and differentiating themselves in the market. Market penetration, market development and product development could also be pursued by companies in the competitive quadrant. A notable example of a company in the competitive quadrant of the space matrix is Samsung Electronics. Samsung operates in various industries, including consumer electronics, semiconductors, and telecommunications. Positioned in the competitive quadrant, Samsung strategically invests in research and development, forms strategic partnerships, and explores both vertical and horizontal integration to strengthen its competitive position within attractive industries. The company's diversified product portfolio and commitment to technological advancements reflect its pursuit of strategies aimed at enhancing competitiveness and market share. But wait, there's more. Analyze the shape created by connecting CP, IP, FP, and SP scores. The shape highlights the focus areas that the company should prioritize in its strategic planning. It helps the company identify where to concentrate resources and efforts to enhance its strategic position. An elongated shape along the horizontal axis means a weak internal position in an attractive industry. In such cases, the company is not very competitive and has a weak internal position in a very attractive industry. It is under the risk of losing relevance and market share and should focus on improving internal capabilities and competitive advantages. Conversely, a compressed shape on the horizontal axis means that the company has strong capabilities and competitive advantages in a not very attractive industry. Diversification into related and even non-related industries may be a good strategy in such situations. Shapes horizontally skewed to the right indicate companies with competitive advantages in attractive industries, meaning strength to profit and capitalize on opportunities. By contrast, if the shape is skewed to the left on the horizontal axis, companies may be struggling to compete in unattractive industries. This is a warning signal to sharpen the focus and rethink the future of the business. What about vertically elongated shapes? The company has a solid financial position under external uncertainty. This means that the financial position can help the company withstand some of the challenges from the external environment, and therefore it can look selectively at opportunities to displace competition that is not as well positioned. They can do this either by exploiting opportunities that competitors may not be able to do, or to acquire market share by means of horizontal integration. A compressed vertical shape may indicate external opportunities to companies with weak financial positions. Companies in such cases may choose to sharpen their focus to seize the opportunities by restructuring, retrenching, divesting low-performing businesses and selectively investing in more profitable opportunities. When the shape is vertically skewed upwards, the company has a stronger overall financial position in a more attractive external environment, which favors investments either for defensive or aggressive purposes. Conversely, shapes vertically skewed downwards indicate companies in challenging situations. an unfavorable external environment with a not very solid financial position. In such cases, companies must be conservative and avoid financial exposure and risk. In conclusion, the space matrix offers valuable strategic insights. The shape highlights focus areas and reveals risk profiles. The quadrants guide specific strategies. But remember, it's a snapshot in time, and the suggested strategies must align with your unique context. That wraps up our journey through the space matrix. As always, strategic decisions should be thoughtful and context-specific. If you found this video helpful, give it a thumbs up, subscribe for more strategic insights, and comment below with your thoughts. Until next time, stay strategic.